A day in life of an FP&A professional. This chapter explores a typical day for FP&A teams and understand how FP&A professionals navigate challenges, support their company's goals, and adapt to ever-changing business needs. Activities in a day. Here are some key activities FP&A usually engage in. 1. Budget review and variance analysis. They prepare the budget. And post. Month-end. Review actuals against budgeted figures to identify variances and suggest corrective actions. 2. Financial forecasting. They update financial forecasts to reflect the latest position of the company's future financials. 3. Management reporting. They prepare periodic reports and presentations that help senior management understand the financial status and progress of the company. 4. Strategic meetings. They participate in strategic planning sessions, offering insights and recommendations based on financial data. 5. Collaboration and data gathering. They work closely with various departments to collect and analyze data essential for forecasting and budgeting. 6. Ad hoc analysis. They perform specialized on-demand financial analysis to address urgent business questions or to provide insights on unexpected scenarios, supporting decision-making in real time. 7. Capital investment decisions. Evaluate potential capital investments, assessing their financial viability, risk, and alignment with long-term goals. They model scenarios, calculate return on investment, and support decision-making with detailed financial projections. 8. Crisis management and response. They develop strategies to manage financial stability during economic downturns, including cost management initiatives and scenario planning to mitigate financial risks. 9. Digital transformation and automation. They lead initiatives to implement new technologies that enhance data processing, reporting capabilities, and analytical insights, driving efficiencies across the company. 10. Global expansion strategy. They analyze and strategize for entering new international markets, managing currency risks, ensuring compliance with financial regulations, and tailoring financial strategies to local market conditions. Next, let's look at some real-life scenarios, examples, and cases. Real-life scenarios and their takeaways. Example 1. Embracing constant change and ambiguity. Mr. Virat is an FP and a manager at a mid-sized company. During the planning season, he is coordinating with various business teams. Here's a breakdown of a typical day. 8 a.m., 9 a.m. Virat starts his day by reviewing emails and the latest draft of the company-wide financial plan. 9 a.m., 10 a.m. He meets with his team of analysts on a standing call to discuss the timeline and deliverables for the upcoming weeks. 10 a.m. His morning takes a turn. His boss, Mr. Rohit, director of FP&A, informs him that the CFO, Mr. Dhoni, has requested revisions to all assumptions for the financial plan. This request comes as the new CEO, Mr. Sachin, aims to implement more aggressive strategies. 11 a.m. 12 Virat revisits the forecasts, focusing on ROI, ROE, and ROA PM for various markets, and proposes simplifying the presentation to make it more accessible by reducing financial jargon. 12 p.m. 1 p.m. lunch offers a chance for Virat to mentor a new hire, Mr. Shubman, about navigating office dynamics, particularly the CEO-CO relationship. 1 p.m., 4 p.m. in the afternoon, Virat conducts Zoom calls with FP&A managers from different regions, discussing their financial targets. 4 p.m., 6 p.m. After compiling the inputs, Virat realizes the company is likely to fall short of its income target, primarily due to 1. Foreign exchange rate fluctuations. 2. Russia-Ukraine war impact on the EMEA market. He delegates his senior analyst, Mr. Surya, to prepare a presentation explaining this variance. This example shows the dynamic nature of the FP&A role, showcasing how professionals must adapt to strategic changes and communicate complex information effectively. Here are some takeaways from the above case. 1. Navigating change and uncertainty. Mr. Virat's day exemplifies the importance of flexibility, which is the readiness to adapt to sudden changes in strategic direction, such as when the CFO, Mr. Dhoni, requested revisions to all financial assumptions. This requires an ability to quickly reassess and realign strategies, with new senior management objectives. 2. Understanding office politics. The lunch discussion about CEO-CFO dynamics highlights the need for understanding office politics. Knowing the interpersonal and interdepartmental relationships is crucial for FP and a career advancement. 3. Ability to see the big picture. By coordinating with various regional FP&A managers and synthesizing their inputs, Virat demonstrates the ability to maintain a broad perspective. This involves understanding how changes affect the global outlook and how to integrate these insights into the company's overall planning. 4. Effective communication. The need to simplify financial presentations by reducing jargon and making them accessible shows the importance of clear communication. Being able to convey complex financial data in an understandable way is critical for ensuring that all stakeholders, regardless of their financial acumen, are on the same page. 5. Strategic thinking and problem solving. The end-of-day realization that the company will fall short of its income targets. Quickly summarizing the big picture reasons being due to exchange rate effects and the impact of the Russia-Ukraine war. The subsequent strategy session to craft a narrative around this issue highlights the strategic thinking involved in FP&A. This shows how we must not only identify and analyze problems, but also creatively develop and present solutions that align with company goals. Example 2. Understanding business and strategy along with leadership and communication skills. 8 a.m., 9 a.m. Emily starts her morning by analyzing overnight financial news. She updates her financial models to reflect the latest market conditions, ensuring her planning is responsive and robust. 9 a.m., 10. She holds a strategy meeting with her FP and a team to discuss the implications of the new information and adjust their approach to the upcoming planning season. Emily emphasizes the need for flexibility in their models to account for economic volatility. 10 a.m., 11. An urgent meeting with the CFO and CEO has been called to discuss a major competitor's recent strategic moves. Emily presents her team's findings and engages in strategic discussions on how to adjust their company's plans to maintain a competitive edge. 11 a.m., 12 back with her team. Emily leads the effort to pivot their PM planning to address the new strategic priorities. They brainstorm innovative cost optimization strategies and explore new revenue streams. 12 p.m., 1 p.m. during her lunch break, Emily networks with industry peers at a local cafe, gathering insights into industry trends and best practices that she could integrate into her planning. 1 p.m., 4 p.m. The afternoon is spent in meetings with department heads to align their plans with the revised company-wide strategy. Emily facilitates these discussions, ensuring that all departments understand their roles in the new strategy. 4 p.m., 6 p.m. Emily and her team finalize the day's work by integrating feedback into the financial plan. They develop a preliminary presentation for the senior executives, focusing on clear communication of the strategic adjustments. In this example, Emily demonstrates strategic agility and leadership, highlighting how FP&A must continually adapt to external economic factors and internal company dynamics. Here are key takeaways from the above case. 1. Adaptability in response to market changes. Emily's ability to quickly assimilate new market information and then adjusting financial models accordingly demonstrates a high level of adaptability. This skill is crucial in allowing her to keep her company's strategies aligned with external economic conditions. 2. Strategic and cross-functional collaboration. Throughout the day, Emily collaborates with her team and other department heads. This ensures that the revised plans are integrated and understood across the company. This ability to facilitate effective collaboration shows the importance of teamwork. Also, it highlights FP&A's role in bridging financial insights with operational execution. 3. Leadership and communication. Emily's day features back-to-back strategic discussions and presentations. All this requires her to communicate complex financial data clearly and persuasively. Her leadership skills are evident as she guides her team through strategic pivots. She ensures that everyone remains on track with the new directives and that the budget reflects the company's adjusted objectives. Example 3. Cross-functional collaboration. 8 a.m., 9 a.m. Lucas starts his day meeting with the sales team to review the latest sales forecasts and to discuss potential financial impacts of upcoming product launches. He helps them understand how their numbers contribute to the company's overall goals and discusses strategies to optimize sales performance against expectations. 9 a.m., 10 next. Lucas sits down with the marketing department to finalize the budget for the new quarter. They go through planned marketing campaigns, evaluating their expected ROI, and aligning their spending with strategic business outcomes. Lucas advises on a few cost-saving measures without compromising the effectiveness of the campaign. 10 a.m., 11. Lucas meets with the IT department. They discuss their current technology investments and upcoming needs. They explore the financial viability of proposed IT projects and how these investments align with broader business objectives. Lucas assists in prioritizing projects based on their potential business impact and ROI. 11 a.m., 12. Lucas uses this time to check and reply to emails and catch PM up on missed phone calls. 12 p.m., 1 p.m. Lucas takes the lunch break and goes for a 20-minute walk. 1 p.m., 4 p.m. Lucas spends the afternoon integrating the insights and data gathered from these meetings into the company's financial model. He updates forecasts and prepares a comprehensive report that highlights key financial insights from each department, ensuring that the executive team understands the interconnected impact of departmental actions on financial health. 4 p.m., 6 p.m. To conclude his day, Lucas presents a summary of his findings and recommendations to the executive team. This example shows how Lucas interacts with multiple departments throughout the day. He ensures that the financial plan is integrated across the company and aligns with strategic goals. Here are some key takeaways. 1. Cross-functional collaboration. Lucas interacted with different departments such as sales, marketing, and IT. This shows the importance of cross-functional collaboration in FP&A. His role in connecting these teams shows how integrated financial planning is crucially important. 2. Strategic influence. Each meeting Lucas has throughout the day not only allows him to gather vital data, but it also gives him an opportunity to influence departmental strategies. His input helps ensure that departmental plans are not only aligned with each other, but they are also aligned with the company's overall goals. This best shows the strategic influence of the FP and a role. 3. Communication skills. Lucas's ability to communicate complex financial concepts in ways that is understandable and actionable for non-finance departments highlights the communication skills required in FP&A. Effective communication ensures that insights are correctly interpreted and implemented. 4. Adaptability and problem solving. Lucas integrates feedback and aligns departmental budgets and strategies. His adaptability and problem-solving skills come into play. These skills are vital in managing the dynamic and sometimes conflicting needs of different business units, while still aiming for optimal financial outcomes. 5. Data integration and reporting. Lucas's skill in integrating diverse data points into a coherent financial model that provides actionable insights is valuable. He prepares a comprehensive report for the executive team. This demonstrates how FP&A synthesize information to guide decision-making at the highest levels. Example 4. Crisis management and response. Sophia, the chief planning officer. Her company faces a significant downturn in the market. The latest revenue projections threaten the need for widespread layoffs. Here's how she leads her team to manage the crisis effectively. Immediate financial review. As soon as the downturn is apparent, Sophia convenes an emergency meeting with her FP and a team to review all current expenses and revenue forecasts. They quickly identify non-essential spending that can be paused or eliminated. These are non-critical vendor contracts, planned upgrades to office facilities, and discretionary departmental budgets. Strategic hiring freeze. Sophia proposes a company-wide hiring freeze to the executive team as an immediate measure to conserve cash. She presents a detailed analysis showing how the hiring freeze, combined with natural attrition, could save the company significant payroll costs. This could prevent the company from resorting to layoffs, scenario planning, to ensure readiness for any prolonged economic impact. Sophia and her team developed multiple scenarios to forecast the potential impact of the crisis. These scenarios help the company plan for various outcomes, including worst-case and best-case scenarios. Communication and collaboration to ensure transparency and maintain morale. Sophia communicates the reasons for the hiring freeze to the entire company. She collaborates closely with HR to manage the implementation of the hiring freeze. Her team ensures that it maintains operational capabilities, ongoing monitoring and adjustment. Sophia sets up a weekly review meeting with her team and key department heads. They continuously monitor the impact of the cost-cutting measures. They adjust their strategies in real time based on new data and market conditions, staying flexible to pivot as necessary. Long-term strategic review, recognizing the need to prepare for future uncertainties. Sophia reviews the company's policies and risk management strategies. This includes enhancing the company's liquidity reserves and diversifying its revenue streams to mitigate the impact of similar crises in the future. Key takeaways. In this example, Sophia demonstrates proactive leadership, strategic thinking, and effective communication. Her approach not only helps the company navigate through the immediate financial crisis, but also positions it for stronger financial health in the future. This case study highlights the FP&A's crucial role in crisis management. It also shows how strategic decisions can prevent drastic measures like layoffs, and at the same time support the company's long-term stability. Example 5. Evaluation of a capital investment proposal. Martin, the senior FP and a manager, receives a proposal from the head of the product development department requesting funding for a new manufacturing facility. This investment is aimed at expanding the company's production capacity. Here's how Martin and his FP and a team approach the evaluation. Initial review and information gathering. Martin begins by conducting an initial review of the proposal. Here he understands its scope and strategic alignment with the company's long-term goals. He requests inputs for detailed projections from the product team. This includes expected costs, revenue potential, and market analysis for the products to be manufactured. Financial modeling and risk assessment. Next, Martin's team creates a financial model that simulates the potential outcomes of the investment. The model includes cash flow projections, payback periods, and different scenarios like best case, worst case, and base case. The model also includes internal rates of return (IRR) and sensitivity analyses. They assess risks, such as market demand fluctuations, regulatory changes, and potential delays in construction and production ramp-up. Stakeholder consultation. To gather broader insights and perspectives, Martin organizes a series of consultations with key stakeholders across the company, including operations, sales, marketing, and legal teams. These discussions help assess operational readiness, market entry strategies, and any legal implications of the new facility. External expertise, recognizing the need for specialized knowledge. Martin uses the company's consulting budget to hire an external consultancy firm to conduct a feasibility study. This study evaluates local market conditions, competition, labor market analysis, and environmental impact assessments. Presentation to the executive team. With all the data and analyses in hand, Martin prepares a detailed presentation for the company's executive team. The presentation outlines the capital investment's benefits, risks, and strategic importance. It includes financial metrics and strategic fit with company objectives, along with a proposed timeline for the investment. Decision-making. The executive team reviews Martin's presentation and engages in a thorough discussion about the proposed investment. Martin and the team answer questions and provide additional insights into the financial and strategic considerations. Based on the comprehensive evaluation presented, the executive team makes an informed decision to proceed with the investment. Implementation oversight. Once the investment is approved, Martin's role shifts to overseeing the implementation process. He ensures financial controls are in place, monitors expenditures against the budget, and updates the financial models based on actual project progress and market developments. Key takeaways. In this example, Martin exemplifies the critical role of FP&A in making informed capital investment decisions. His rigorous approach to evaluation ensures that the investment is not just financially sound, but also strategically aligned with the company's long-term goals. This example highlights the meticulous process of financial due diligence, stakeholder engagement, and strategic foresight that FP&A professionals bring to capital investment decisions. Example 6. Navigating the annual budgeting process. Elena, the director of FP&A, leads her team through the annual budgeting process. This year, they implemented a hybrid approach, combining top-down directives with bottom-up feedback to set financial targets and align budget allocations. Initial top-down guidance. The process begins with the executive team. The execs include the CEO and CFO, setting overall corporate objectives and preliminary financial targets based on the company's strategic goals. Elena receives these top-down directives and is tasked with disseminating them across various departments. Departmental bottom-up submissions. Elena distributes Excel budget templates and instructs each department head to draft their initial budgets. These are based on their specific needs, projected costs, and planned initiatives for the upcoming year. Departments consider their personnel needs, operational costs, and development projects, aligning their proposals with the strategic priorities communicated by Elena. Review and consolidation. Once departmental budgets are submitted, Elena's team consolidates them into a single preliminary budget. They review each department's requests in detail, checking for alignment with strategic priorities and assessing the realism of the proposed expenses and revenue forecasts. Negotiation meetings. Elena facilitates a series of budget negotiation meetings. In these meetings, discrepancies between the top-down targets and bottom-up submissions are addressed. They involve department heads and are aimed at reaching a consensus on budget targets and allocations. Elena encourages constructive dialogue, guiding the conversation to focus on strategic goals and the overall strategy of company. Scenario planning and adjustments. To accommodate various potential future states of the company and its market, Elena's team develops multiple budget scenarios. These include optimistic, pessimistic, and most likely financial outcomes. This approach helps in understanding the impacts of different budgeting decisions under various economic conditions. Finalization and approval. After rigorous reviews, multiple back and forth and adjustments, Elena and the team arrive at the final budget version, incorporating the agreed-upon changes from the negotiation meetings. This final version is presented to the executive team for approval, communication, and implementation. Once approved, Elena oversees the communication of the final budget to the entire company. She explains department-specific allocations and budget guidance for the upcoming year. She also sets up a monitoring plan to track budget adherence throughout the year. This example shows the collaborative nature of the annual budgeting process under Elena's leadership. It highlights how FP&A balances strategic goals with operational needs through careful planning, negotiation, and adjustment. This ensures the budget is not only a piece of document, but a strategic tool that guides the company throughout the upcoming year. Example 7. Digital transformation and automation. Amelia is the VP of FP&A at a fast-growing tech company. She recognizes the need to enhance the department's technological capabilities to keep pace with the rapid growth and increasing complexities of the business. Amelia initiates and spearheads a digital transformation project. The project aimed at revolutionizing how the FP&A functions operate. Assessment of current technologies. Amelia begins by conducting a thorough assessment of the existing systems and tools. She identifies the limitations of current technologies, particularly in handling large data sets and generating real-time analytics. These are crucial for quick decision-making. Selection of advanced financial software. After meeting different tool vendors and evaluating several options, Amelia and the team decided to implement a system that integrates AI capabilities. The new tool, once implemented, will automate routine tasks such as data entry and report generation, and provide sophisticated tools for predictive analytics and scenario planning. This will free up FP&A team's time to focus on value-added business partnering, training, and change management. Understanding the challenges of adopting new technology, Amelia organizes comprehensive training sessions for her team. These sessions are designed to familiarize everyone with the new system's functionalities and best practices. She also sets up a support system to address any issues as the team transitions to the new software. Integration of AI and data analytics. With the new system in place now, Amelia leads the integration of AI-driven tools that enhance financial forecasting. The AI algorithms analyze historical data to identify trends and patterns, enabling the FP&A team to make more accurate forecasts. Pilot testing and rollout. Before a full company-wide rollout, Amelia initiates a pilot testing phase where selected SPOCs use the new tools to ensure they function as expected. Feedback from these tests is used to adjust and improve user experience. Real-time reporting and decision support. The new tool has real-time reporting capabilities. It significantly reduces the time it takes to generate financial reports and insights. Amelia and the team use these capabilities to provide executive leadership with timely data, supporting faster and more informed strategic decisions. Evaluating impact and scaling. After successful implementation and initial usage, Amelia and the team evaluate the impact of the project. They review improvements in efficiency, accuracy, and strategic impact. Based on these outcomes, the FP&A team plans a phased approach to expand the use of these technologies across the company. This example demonstrates the critical role of FP&A in leading digital initiatives within a company. Example 8. Strategizing global expansion. Carlos, the head of FP&A at a consumer goods company, is tasked with leading the financial strategy for the company's expansion into a new international market. His approach involves detailed planning and analysis to ensure the success of the new entry, market analysis, and entry strategy. Carlos starts by collaborating with the market research team to gather insights. They investigate the economic, cultural, and regulatory landscapes of the target market. Based on this information, he develops financial models that forecast potential revenues and costs associated with the new entry. Currency risk management. Understanding the complexities of operating in multiple currency environments, Carlos implements a comprehensive currency risk management strategy. This includes the use of forward contracts and options to hedge against currency fluctuations. He also sets up a monitoring system to regularly assess currency risks to adjust hedging strategies as needed. Compliance with international regulations. To ensure compliance with international financial regulations, Carlos works closely with legal and compliance teams. He oversees the establishment of internal controls and procedures that adhere to local financial reporting standards, tax laws, and business regulations. This effort is crucial to avoid legal and financial penalties. Local financial integration. Carlos advises setting up a local finance team. They hire a local team member who is well-versed in regional business practices and can manage day-to-day finance operations. This new hire will play a critical role in customizing pricing strategies, managing local vendor relationships, and conducting regular oversight and analysis to align with the headquarters' expectations. Training and development. Recognizing the importance of having a well-informed team, Carlos arranges training sessions for both the central and local finance teams. These sessions cover key areas such as local financial practices, integration processes, and updates on international financial management strategies. Regular strategy reviews. Carlos establishes a routine of strategic review meetings that involve key stakeholders from the central and local teams. These reviews help track the progress of the expansion, discuss challenges, and refine strategies as the market dynamics evolve. It ensures that the company remains agile and responsive to new opportunities and risks. Long-term financial planning. With the initial setup and operations underway, Carlos focuses on long-term financial planning to support sustained growth in the new market. This includes reinvestment strategies, capital allocation, and planning for potential expansions and acquisitions within the region. In this example, Carlos and the team show us how FP&A play a pivotal role in global expansion strategies. FP&A helps ensure that the company not only enters new markets effectively, but also establishes a robust financial framework to support long-term success and compliance across borders. Example 9. Integrating sustainability (ESG) factors in financial planning. Nadia, the director of FP&A at a leading manufacturing company, is tasked with spearheading the integration of sustainability initiatives into the company's financial strategy. Her goal is to ensure that these initiatives not only contribute to environmental goals, but also align with the company's long-term profitability, sustainability audit, and strategic planning. Nadia starts by conducting a comprehensive sustainability audit in collaboration with the Environmental Affairs Department. This audit assesses current practices, identifies areas for improvement, and benchmarks against industry standards. Based on the findings, she develops a strategic plan for implementing sustainable practices that align with the company's core business objectives. Financial modeling of green investments. Nadia and her team evaluate potential investments in green technology. These include energy-efficient systems, waste reduction processes, and renewable energy sources. They create detailed financial models to project the cost, savings, and payback periods of these investments. The models also factor in potential government incentives for sustainable practices. ESG factor integration. Understanding the importance of ESG factors, Nadia incorporates these into the company's financial evaluation criteria. She develops metrics to assess the impact of sustainability initiatives on environmental outcomes, social responsibility, and governance standards. These metrics help quantify the intangible benefits of these initiatives, such as improved brand reputation and customer loyalty, stakeholder engagement, and reporting. Nadia organizes workshops across the company to raise awareness about the importance of sustainability in financial planning. She also ensures that sustainability efforts are transparently reported in the company's annual financial reports and investor communications, highlighting the alignment with ESG criteria and the expected impact on financial performance. Performance monitoring and feedback loop. To measure the effectiveness of implemented initiatives, Nadia sets up a system for ongoing monitoring and reporting of sustainability metrics. This system tracks progress against environmental goals and financial targets, providing data-driven feedback that informs future adjustments. Long-term sustainability roadmap. With the initial strategies in place, Nadia plans for the long-term integration of sustainability into the company's business model. She outlines a roadmap for scaling up successful practices and exploring new areas where environmental damage impact can be further reduced without compromising financial viability. In this example, Nadia and the team demonstrate how FP&A can make sustainability a core component of the company's strategy. Her approach ensures that environmental and social governance factors are not only included in company policy, but they are also part of the economic equation that drives profitability. In this chapter, we explored a typical day in the life of FP&A teams. Through various real-life scenarios, we've seen how FP&A professionals expertly navigate challenges, diligently support their company's strategic goals, and adaptively respond to ever-changing business needs. The examples highlighted the essential skills and strategic insights that FP&A teams bring to the table. From crisis management and capital investment decisions to digital transformations and global expansion strategies. FP&A professionals are not just number crunchers. They are strategic partners who ensure financial decisions strengthen operational capabilities and drive long-term growth. Their ability to integrate financial acumen with operational insights allows them to offer invaluable support in steering the company towards growth and sustainability. As we move forward, in the next chapter, we'll deep dive into the typical FP and a monthly calendar.